guest in studio this evening are Jim Dupree, the IRS spokesperson for Maryland, D.C., and Virginia, and along with him is his colleague, Paulette Thompson, who is an IRS tax specialist. We're going to be taking your calls. Let's go ahead and open up the phone lines because I'm sure folks, of course, you know, I get first pick because I'm here in studio, so I get to ask my questions first, but I'm sure you've got some questions you want to ask, particularly because this is April the 15th. Give us a call at 410-319-8888. That's 410-319-8888. You know, my next question, and we'll take some calls in just a moment, is, you know, what are some of the common deductions that people could miss if they weren't careful?
Well, one of the big tax credits that we think maybe 25% of people that are eligible for it miss is the earned income tax credit. And we're talking life-saving money. And this is a credit available to people who worked but didn't earn a lot of money. So if you were married with 2 children and earn less than $39,000, you'd be eligible for this credit. But yet you don't have to be married and have children. If you earn less than $12,500, I think if you're single, you'd be eligible for it as well. And it's a refundable tax credit. On the maximum side, you could see a refund check for over $4,700.
Really? So, you know, for many of us, we think that you have to have paid those taxes in order to get them back. But if you fall beneath earning an income, it may be that you would not have had a tax liability. That's right. But in that case, you still want to file because of this earned income tax credit.
And a lot of people miss it because they didn't earn the level that they're required to file a return. So in some cases, they don't file a return because they don't have to file a return. But they're missing out on again, what I consider life-changing money.
Well, excellent. Well, the phone lines are open, so I want to go right to the phone lines. Again, we're taking your calls. In studio with me is IRS spokesperson Jim Dupree, along with his colleague, Paulette Thompson, and we're taking your questions. And, man, people aren't playing. These lines are lit up, so if you get a busy signal, please call back. We're going to go right to Andra, who's on the line. Is that Andra or Andra?
Andrea.
Andrea, welcome to the program. A question for us?
Yes. I actually have a 19-year-old college student who I claim myself. However, this year she filed her own tax return because she made a little over $5,000. Does that disqualify me for receiving the stimulus credit for her?
It would. I guess it would. It would disqualify you, but then she'd be able to get it for herself this year.
Okay. All right. That works. Thank you so very much.
Appreciate your call, but just one point of clarification. If she gets the actual stimulus rebate, her parent will not be able to claim her as a dependent. Is that right?
That's correct.
Okay, so I just want folks to understand that. It's nice for your child to get some $300 check, but the bottom line is it may be more in your favor to claim them as a dependent, you know, and I know this personally because I certainly checked that out. So
and some of the college fees might be a deductible expense for her as well.
Exactly. So
really
again, phone lines are open 410-319-8888. We're talking taxes this evening.